Hello everyone, welcome to Seed Boosters. I am back with another technical content on financial reporting paper. This time I am bringing with you the calculation of group retained earnings, which is a compulsory element to be calculated while preparing consolidated statement of financial position. So, I have taken a question here, which requires that the retained earnings in parents or groups consolidated as OFP statement of financial position of 31st March 2005 should be calculated. So, while calculating a group retained earning, we need to take the retained earnings of parent. So I am listing out few points here. So retained earning of parents, then we need to take the group share of the post acquisition retained earnings and post acquisition retained earnings of subsidiary and any other adjustments given in the scenario, such as the impairment of goodwill or the calculation of PERP, proportion of unrealized profit, or any other such workings. So to begin with the question, here is the requirement. I have already stated the requirement is to calculate the group retained earnings for W group. So let's go through the question. Will Winslow acquired 80% of the equity shares of Zeta on 1 April 2004 when Zeta's RE were 200,000. Okay, during the year ended 31st March 2005, Zeta purchased goods from Wilson totaling 320,000. So goods were purchased from Wilson. So this is the intergroup transaction, intercompany transactions. That is the transactions between the parent and subsidiary. At 31st March 2005, one quarter of these goods were still in the inventory of Zeta. Okay, so out of the total purchased goods, one fourth is still in the inventory. Wimson applies a markup of 25% to all of its sales at 31st March 2005, which is the year end. In our case, the retained earnings of Wimson and Zeta were 450 and 340,000 respectively. So we are provided with required information and an adjustment related to the intra group trading. So we need to adjust this information and calculate the final retained earning, which will be shown in the statement of financial position of Williamson Group. So to begin with the calculation, let's prepare the pro forma for group retained earnings. So I'm writing here calculation of group RE. So this is the requirement itself. Now I'm preparing the format here. The format is, so at first compulsorily we take the parents retained earning, that is parents RE, which is in this case Wim slow. So parents RE, we are taking parents RE here. So in this case the parents RE is 450,000. It is here 450,000. So the retained earnings of parent is compulsory element in the competition of the group retained earnings. So we compulsory first take the parent retained earning. Then subsidiary during the period from 1 April 2004 to 31st March 2005, subsidiary has some earnings during that period. So the proportion of earnings, the share of the earnings is taken by the group in and it is shown under group RE. So group share of post acquisition earnings of sub C. So in this case, sub C is Zeta. So group share of post acquisition earnings of sub C. So in this case, the sub C is Zeta. So the subsidiaries retained earning at the end of the year is 340,000, and at the beginning of the or at the acquisition date is 200,000. So 340,000 is at the end of the year, and 200,000 was at the acquisition date. So it means that post acquisition subsidiary has on 140,000 more access. So into the share of group is 80%. So if I calculate this, 140,000 into 80% will be 112,000. This is the group share of post acquisition earnings of subsidiary. Now the third adjustment we need to do here is to calculate the proportion of unrealized profit of from the sale to subsidiary. So PURP on intra-group trading. So there is one point to note here. If the seller is parent, then the unrealized profit is within the parent's retained earning. If the seller is parent, then the unrealized profit is within the parent's retained earning. So we need to make the adjustment of PORP in the calculation of group retained earning. But if the seller is subsidiary, then the unrealized profits proportion is within the retained earning of subsidiary. Yes, if the seller is subsidiary, the proportion of unrealized profits portion is within the retained earning of subsidiary. So in that case, we will not be making adjustment here in group retained earning calculation. Rather, we will be making adjustment of that PORP in the calculation of net assets of subsidiary in during consolidation exercise. So we need to be careful. If the parent is seller, we need to make the adjustment here. If the subsidiary is seller, then we need to make the adjustment in calculation of net assets portion. So only if P is seller. So let's calculate the PORP here. So the total profit. So I am doing it in workings. Workings. Total profit on sale is total sale is 320. So markup of 25% is used. So it means that this 320 is 125%. So profit on sale is calculated by using this method. So if this is 125%, if this is 125%, then how much is 25? We are calculating that one. 320,000 into 25 divided by 125. So using the rule of markup and margin, 64,000 will be the profit on sale to the subsidiary by W to Z. Yes. So this is the total profit. So out of this total profit, how much is unrealized portion? That is what we are going to calculate. So in the question, it has stated that only the 1/4 of the goods, 1/4 of the goods are in inventory of Zeta. It means that out of this 64,000, only 1/4 portion is unrealized and 3/4 portion is realized because it has been already sold to third parties by Zeta. It means the goods has 3/4 portion of the goods has gone out of the group. It means that the profit is realized by the parent. So now, therefore, PURP is equal to 64,000 multiplied by 1 by 4, 16,000. So we can use this figure here. 16,000. So since this is the unrealized profit and this should be eliminated during the consolidation exercise, I am deducting it from the group retained earning because this 16,000 is already covered in 450,000. So I am eliminating this from the consolidation process. So in total, 450 plus 112 minus 16,000. So in total, I am calculating the group returning, and which has been calculated as $546,000. This is the group RE. So in this way, we can calculate the group RE because there are no other adjustments. In these workings, we might have to make the adjustments of items such as the impairment of goodwill if it is calculated using fair value method, proportion of net assets method. So either way, we need to make the adjustment of impairment here in group returning. If there is an associate, we need to take the share of profit of associate here. So there are some other workings we need to learn to calculate the group return earning completely. So in for this question, only there are two adjustments. In fact, the adjustments of the group share of post acquisition reserve of subsidy on the return earnings portion, and the perp on the intergroup trading. So this is how we calculate the group retained earnings in for the purpose of consolidation. So I'll be back with the next technical area in next session. Till then, bye bye.